So what is up, flippers? Once again, it's Marcel here. Here I am with a recap video about today's price action on Euro USD. Actually, I didn't even open a trade today because I had a limit order, which ended up in a no tag. Actually, price missed my limit order by 0.1 pip, and there was another opportunity, a short opportunity too, which I didn't even take because I was distracted with something else in this session. I was doing something else, and I wasn't really focused on trading today. But actually, it was a pretty nice opportunity, and lots of you guys took it. And yeah, I just wanted to break it down for you because it was a really nice opportunity, and I'm really proud of you once again because you took it. And yeah, even though I was distracted, I wasn't really concentrated and focused on trading. I just wanted to create this recap because today was a pretty good day on Euro USD. So let's just begin the recap video right here. And let me tell you what the plan was for today. So we have the 50-minute demand region right here, and liquidity was located inside of this demand here. So this liquidity has been swept into the demand even before the session open, and the 50% mitigation has already happened even before the session open. So this is exactly 1 minute before the New York session open. And the plan here was pretty easy. We were either looking for the confirmation long trade right here to the upside with a change of character and entry criteria, or we were waiting for the break of this demand into the next 50-minute demand region confirmation here and longs, or if this demand wasn't been able to hold price, then we would have been look for short all the way down to this next extreme demand region. So the plans were pretty easy. We were looking for these reaction law based things, confirmation for long or confirmation for short on any of these areas. So let me just play price forward and tell you what has happened here exactly. So price basically was consolidating inside of this demand region and couldn't really decide what to do. But at this point, it reversed to the upside. It reversed to the upside and created a pretty nice opportunity for a long trade. So you can see that technically this is our last supply region that has caused the last inefficient push to the downside, because below this supply, we can't really identify inefficiency or volume on any impact. So you can see that this is the last inefficient candle. This is the last supply that has caused the push to the downside and mitigation of the 50% on this demand. And below this supply, there's no inefficiency can be found in this movement because price was consolidating all the way down in this region. But price reversed at the bottom mitigation of the demand and basically flip this supply. So the flip of this supply has happened here. And the flip has happened from perfect doji candle that is located here. And basically, this was the base of the entry. I was planning to enter here on this demand because I had a limit order, which wasn't fulfilled. And let me just explain everything here. So I saw this demand. I saw that the flip, first of all, the mitigation of the supply has happened. A small rejection was given, but the short couldn't be continued to the downside. And instead of the short continuation, price just simply left a flip zone behind on this line. So here's a flip, and the flip has happened initiated from this doji candle. But below this doji candle, we had another decisional located here. Actually, this decisional was way too part of the liquidity for me, not to talk about the extreme. Also, there was an extreme big zone down here, but this extreme was directly extremely part of the double bottom liquidity on the 50-minute time frame. We had the double bottom liquidity here, first bottom, second bottom. This was liquidity built up for the upcoming short. So basically, for me, only the highest decisional candle wasn't part of the liquidity. This was too risky for me. I wasn't really planning to open a resplit order here and here on the decisional. And of course, I wasn't planning to open an order here on this extreme zone because it was directly part of this huge liquidity line. So the only go zone for me was this doji candle. But I wanted to do something here that actually assures me that I will be in the trade and I will be protected by a stop loss. And that's why I used the 50% entry here on this doji candle. Of course, the 50% entry was good according to your plan too, because the wick is more than 50% of the candle. Basically, the whole candle is made by a wick. So a correct entry here is a 50% entry, right? But I made something here that actually made me cover the second decisional zone too. And this decision was to actually set a 3 pip stop loss. Because if I did set a limit order here on the 50% and use a 3 pip stop loss, you can see that here's a 3 pip stop loss. that could cover the whole decisional, second decisional zone too. So that's why I was planning to enter here on the 5th% of this doji candle, because I'm wanting to make sure that I will cover the second decisional too, because I just simply use the one limit order and after split the risk. So yeah, I did use 1% limit order here. I didn't split the risk. I didn't use lower risk. I risked 1% here, and basically price on Metafor tagged me in. Here was a tag. It exactly tagged me in on the 50%, but in reality on IC markets it was a no tag trade. So on IC markets it didn't tag me in the trade. I just sent an update into the group that showcasing that I did set a limit order there and it didn't tag me in by 0.1 pip. So yeah, it was unfortunate because on TradingView it was an exacted and perfect tag, and I've never experienced something like this before with IC markets. IC markets usually, and not just usually, always tags me on these exact entries because they are using zero spreads. But yeah, somehow it didn't tag me in this case. Okay, so after this one, price went up to a nice amount of profit, was following this entry point. But before we continue with this recap, let me just track the criteria for this trade. So basically, there was a higher time frame mitigation, right? First base criteria, higher time frame mitigation. Second one is the basically liquidation, because as I said, price swept this huge amount of liquid trend line into the demand region. So the second criteria is the liquidity sweep into the demand. Third criteria was inefficiency. Inefficiency can be found here and here. So it was a perfect inefficiency for this area. Fourth criteria was a pro order for pro trend because 50-minute was following a bullish structure, just recently broke the previous structural high point here to the upside. So pro order flow, unarguably pro order flow here on the 50-minute time frame. So we had all the 4 base criteria. Fifth criteria was the flip of this supply region here. Sixth criteria was the 50% and more than 50% mitigation of the whole demand region. Seventh criteria, actually I wouldn't really give a V-shaped rejection here as a criteria because price was hesitant inside of this zone, right? So I can't really give a V-shaped rejection criteria for this hesitation right here. So it's a no criteria. Seventh criteria, price wasn't coming from an unmitigated opposite-sided region right here. There was no opposite-sided zone mitigation. Eighth criteria was basically the liquidity to target, because there was really nice amount of liquidity to target on the upside. On the higher time frame, you can see that here was double taps. This was double taps that we could target. Actually, this was my target point. Zooming back in, this was the 8th criteria. 8th criteria. No, actually, I would write it here. So that was the 8th criteria. 9th criteria was the corrective pullback strong pro. Basically, I just used this criteria because the 50-minute time on the 50-minute time frame, we had really nice bullish movements to the upside, and basically the bearish movements were pretty corrective. So these bullish movements were actually strong, and the bearish movements were pretty corrective all the way down to the demand regions, except this one. So this wasn't really a corrective pullback, but to the 1-minute entry POI, price presented a corrective pullback. So this was a pretty corrective pullback right here that made the tap of this 1-minute order block, this 1-minute demand. Because, you know, if it wouldn't have been a corrective pullback, then it would have looked like 2 or 3 huge inefficient volume candles. And this is not the case in this scenario. So that's why I counted the 9 criteria as the corrective pullback strong pro, because the strong pro was still valid. Okay, so the 10th criteria was the combined liquidation. That is not fulfilled. So there was no combined liquidation here for the 1-minute POI. Maybe we could count the middle of nowhere reversal here on the 1-minute time frame, but I didn't really count it. For me, it was a no liquidity creation. It was no combined liquidation. 11th criteria was what was the 11th criteria? Wait, let me just quickly count it again. Higher time frame mitigation, liquidation, inefficiency, pro trend, flip. Oh yeah, sorry, that was the V-shape. That was V-shape. So yeah, 2 criteria were missing: the V-shape rejection and the combined liquidation was missing for this trade. So that's why I counted 9 criteria for this trade. And I just wanted to enter here, but it was a no tag for me. Okay. Continuing, let me just delete all of these numbers from my screen. Continuing, price was running pretty well in profit at this point. Then it went back almost to the break-even point. You know, at this point, I just deleted the limit order because on TradingView it was a tag. So yeah, I just deleted the existing limit order. I was waiting for another opportunity. At this point, price was going up, going up, going up. And here I saw something. Here I saw something that price actually rejected strongly on something here. At this point, I wasn't really focused on trading. So I want to point it out once again, as I pointed it out at the beginning of this video, that I wasn't concentrated on trading pretty much because I had other duties to do. I had other things to take care of in this session. So I wasn't sitting in front of the laptop. I wasn't really monitoring the session. But at this time, actually, I was here, but wasn't paying full attention to the chart. But I just saw that price rejected on something here. So if you see some rejection, if you see a strong rejection, what do? You just simply, let me just remove this one first. So you just simply switch up to the higher time frame to see if there's any higher time frame zone rejection. And in this case, there was a 5-minute zone rejection here. A perfect less recent 5-minute zone has been mitigated. And here's a mistake that I have made. I admit it was a mistake. I'm a human too. I am actually built like you. I can do the same mistakes as you because I am a human too. And for the reason I wasn't really concentrated on trading, I didn't really count the whole candle. So I just quickly took a look at the charts. Actually, I did take a look at my charts on my phone. So after I took a look at the charts on my phone, I came back to the laptop and sent you the markup update. But here, actually, I just marked out the weak area. Because as I said, I wasn't really concentrated on trading. I wasn't really paying attention to the charts. And by the quick moment I saw this chart, I just saw that, okay, price just reacted 1% on this weak area. But in reality, it wasn't a weak area. In reality, it was the whole candle that could be counted as a supply region, right? And this whole candle has been mitigated on almost the 50%. 50%. It was like a 47%, 48% mitigation here on this area. So that's where my mistake has been made. I wasn't really paying attention to trading. I wasn't really paying attention to charts. So that's why I counted the week as the right supply. Yeah, once again, I admit it. I've made a mistake. But, actually, by making a mistake, nothing really has been harmed, because I didn't really open a position here. So the only bad thing of this mistake, the only downside of this mistake was that I was left out from a really nice trade that could have hit my TP and could have put money in my pockets. But yeah, this is on me. I've made a mistake. I wasn't really concentrated. I wasn't really pay that much of attention. So I've been left out from the trade. And that is the thing that has happened here, because as I said, once again, I just marked out the wick instead of the whole candle. And basically that's the end of the story here. Because after this one, price just formed a pretty nice and pretty brilliant opportunity here, because mitigated almost the 50%, like 48% has been mitigated. After mitigation, after the liquidity sweep, price created a perfect flip zone right here. This demand has been mitigated. This 1 minute has been mitigated. Instead of giving the new breakout structure to the upside here, it just simply flipped this demand, leading to a flip zone. Leading to a flip zone. And this flip zone was this one, basically, because this supply area, this candle has started this nice volume to the downside that was leading to a flip. So yeah, I've been missed out from this trade, but lots of you guys took it. And I'm really proud of you that you haven't made the same mistake as I did. You were concentrated on trading and you made profit on this pretty brilliant idea, because price afterwards just simply dropped down. So you could simply settle it here on this order block, either on the full body, either on the 50%. Both of the entries kept you in the trade. And yeah, the liquidity line could have been targeted here, or the 1 minute extreme could have been targeted. And basically price just reversed back up after the mitigation on the third bottom, because price just created the third bottom right here and reacted on this extreme, reacted on this 1 minute extreme. But it was risky to open a position right from this extreme, because as I explained, it was part of the double bottoms. But at this point, it just became part of the triple bottom. So there was even more liquidity to take for the short. But if you entered here, you could take partials. So I believe lots of you guys took partials here. And yeah, basically, let me just play price forward at what has happened afterwards. So price was just hesitant, created the 4 bottom, and that's where we are at currently. So basically, there are 4 equal bottoms to target for a short trade. And to anyone who took this trade, congratulations. This was a perfect trade. So it's not the kind of situation where I didn't enter because it was a no-go zone for me because it was a bad trade. No, it was that situation when I wasn't paying attention. I made a mistake and I couldn't enter there because I made a mistake. So I'm admitting my mistake, and that's what you should do after making a mistake. You know, I'm here. I'm admitting my mistake in front of almost 1,000 people, right? So you should admit the mistake to yourself. This is how you can learn from it. This is how you can evolve from it. This is how you can make improvements from your mistakes. And yeah, that's it. What's the conclusion for me? What's the conclusion for me about this mistake? That I shouldn't really trade when I can't pay attention, full attention to the charts, and I shouldn't really force these days when I can't pay the attention, right? So this is the thing that I've learned from this one, that if I'm trading, I should focus on the charts 100%. I should pay full attention to the charts. And if I can't pay full attention, then I shouldn't even come around the charts. And yeah, basically that's it. Let me just finally count the criteria for this trade because there were plenty of. So let me just mark it first here. Okay, so the first criteria for this short trade was the higher time frame mitigation. Obviously, a 5-minute zone mitigation is a higher time frame zone mitigation. Second is liquidation right here. This liquidity has been swiped into the zone. Third one was what was this third one? Yeah, the inefficiency here. Inefficiency has been created by the supply. Fourth one was I don't know if we can count this as a pro trend or a counter trend, because basically I counted this as a pro trend. So in reality, I can count this as a pro trend too. So if I count this as a pro trend, this can be a pro trend too. So give me a minute. Let me just put here the counter trend criteria tracker. All right, so here it is. So, okay, let's just count this as a counter trend trade, because basically, as I said, if we counted this as a pro trend, then we can count this as a pro trend too. We have to count this as a counter trend. So first counter trend criteria is the higher time frame mitigation. Of course, it was tick. Second, liquidity to take for the higher time frame zone or for the entry zone, it was tickable too. Strong change of character has happened also. You know, it's a base criteria for a counter trend trade that price has to change character strongly. The strong change of character has happened here also. So basically, it was tickable too. Here's a strong change of character. The reason we are counting the strong change of character here on this line is because this was the simple change of character point. This was the structural low point, structural high point. This high point was broken from this low point. So this becomes the change of character point. And this is the previous structural low point. So this is the strong change of character line, right? So it was tickable too. Higher time frame, liquidity to take, strong change of character, inefficiency, still there's inefficiency. Inefficiency, liquidity to target, you know, there's triple bottoms to target or even quadruple bottoms to target on the downside. So all of the base criteria are tickable. Change of character slash flip, there was a change of character slash flip. V-shape rejection, there was a V-shape rejection here on this supply area, and arguably price was coming up, mitigating it, then reversing to the downside immediately. This is a V-shape rejection, right? And on the demand example, it wasn't a V-shape because price was hesitating for so long inside of this demand. Now this is a V-shape, perfect V-shape. After this one, 50% mitigation, you know, we count the 45 to 50% mitigation as a 50% mitigation. So it was tickable, not coming from a mitigated zone. There wasn't any opposite-sided higher time frame zone mitigation at this point. And combined liquidation, only the combined liquidation was missing. So this trade was lack of one criteria only. So it was almost a full criteria counter trend trade, which you should take and which you did. So you took this trade. I'm really proud of you. Once again, I've made a mistake here. I can't say it out loud. I mean, I can say it out loud as many times as you want. And yeah, that is it, guys. First trade here on this demand, it was a no tech for me. Second trade was missed by me because of a mistake. And that's it for this day on Euro USD. I believe it was a pretty interesting day because price formed two high criteria opportunities on both of the long and short sides. So yeah, congratulations to anyone who took a profit today. Actually, there were lots of you guys who took profit or passed the phase one. We had two phase one passes once again today. So yeah, lots of you guys were eating today. Lots of you guys were eating yesterday. Lots of you guys were eating on Monday. Lots of you guys are eating every single day on these trades. So yeah, I'm really proud of this team. I'm really proud of the Flipping Markets community. Keep up the good work, guys, and keep doing what you're doing because you are doing a brilliant job. And see you tomorrow.